Good morning. It's Harvey Jackson from Seed Grain Marketing. We're just going to go through drought monitor update and just what we're seeing in the few markets that are trading today. So canola is up $5. Rapeseed is basically flat, and we've had a pretty good day yesterday with soybean oil moving up a cent and a half to 1.2 cents. Palm oil is flat, and milling wheat is up a little wee bit, and that's all that's really open today, other than the Canadian dollar, US dollar. Drought monitor index. There's been some changes here. There's slightly more drought. As you can see here, there is a bit more drought. Corn went up by 1%, and soybeans went up by 2%. And I'll maybe just go through what I'm looking through on some of the drought monitor index PDF. So here you can see the major growing area of corn, and there's some drought in Illinois, which is one of the major growing areas, and I'll show you that right here, where Illinois makes up 15% of all corn produced in the U.S. So they're number two, and there's 14% drought, and I would say that's where most of the drought changes have come from. And you can see how drought has been in a year ago versus right now. We're sitting at very low levels of drought. Same thing with soybeans. Soybean growing area is slightly different, not a whole lot. Delta area, but Illinois has that same drought area, but they are number one, and they grow 16% of the U.S. drought or U.S. Soybeans. And again, here versus last year, percentage of drought. So that is likely the reason why, or it is the reason why soybeans have traded a lot lower, and supplies don't look like it's diminishing as of yet. So a week outlook here using the model that artificial intelligence from Euro, and I'm just going to use this consistently through the next few slides. So there's some precipitation going to show up in Manitoba and light traces everywhere else in the next 7 days. Here it is in North America kind of a area. So you're seeing same kind of areas of rainfall. Here we've got light rainfall in Ukraine and Russia, Belarus. Here's China. There's some lighter area right here, but other than that, other areas are starting to get significant rainfall. You're looking at 7 to 8 inches of rainfall here, and the same kind of thing over here in India. There's been some significant rainfall for their production season over there as well. So I'm going to do the reverse, go and look at a temperature going backwards. So China, India, very hot. You've got extreme temperatures in the 90s to 100s. And again, this using the same model. Russia, Ukraine, they are getting hot over there. You can see that area has got a lot of heat. And you move over to North America, and it doesn't look as hot at all. But there is some heat coming, and again, every model is going to be different. What actually happens is in a week's time is anybody's guess, but it does look like it's warming up. And that kind of just shows on this next map that nutrient ag solution splits out, but you can see that these areas are showing a little bit more heat and actually cooling off from normal in the next 10 days. So maybe I didn't put enough time on my other maps, but either way, there's some heat coming towards us, which would be welcomed, I'm sure. So your temperature outlook for 3 to 4 weeks, still showing some above and some normalish kind of temperatures. Precipitation outlook still looks like I'm up in here in the writing, and of course that's looking like it's going to be above normal if this stays constant, but would imagine it's going to change. Canola. Here we are. The first slide is actually going to be rapeseed, and rapeseed actually broke through the top line resistance. So now it's hopefully we can get a couple of days trading above this to continue to move up. And here is what rapeseed has done, priced in Canadian dollars, minus canola. So it is $90 more expensive than Canadian canola. And then here I'm just going to show that same slide is here, but I just extended the time when we had 9 to 10 million metric tons of canola export from Canada is when we had this higher levels than where we are. So we're trying to push into this range right now. So if that can actually happen, we could maybe catch a little bit more of an export bid if we can move up into this area again. Now, I'm not predicting that happening, but hey, just showing you what has happened. Canola itself, we've had multiple green days here, so if we can continue to trade, we'll probably get to an 661-ish, somewhere in that area is your support and resistance, and so it shows right here, and this is all from bar chart. It's actually a 32% buy. First resistance point is 661, second resistance is 669, and 679 are the next ones. And it does look like there's some strength and still currently strengthening, so that's all good. Soybean oil, it does have an upside target at the 23.6 Fibonacci retracement, so that is another uh, half a cent if we can actually trade that tomorrow. It's actually not trading today, but it's just giving you a bit of a visual how that's actually traded in the last few days. So it's been pretty consistent and very steep increase, which is great. Wheat, here we are, spring wheat, not trading, but just looking at where it's been and where we are right now. So we had a down day yesterday, but looking at, hopefully getting to that 667, 60 or 668 would be the probably need to get above there, and that would be a good thing because we have to kind of break out of this funk that we're in this low side here. So this is a strategy that I had a few growers do. We were buying mini minus Kansas in the spread. We were buying it in this range in the 25 to 30 cents. And as of yesterday, it was closed out at 40 cents with an upside target probably to sell in that 70 to 80 cents, depending on what the market is doing. So that is a protein quality spread on mini gaining on Kansas. Here's your milling wheat. And it's not a surprise that the 38.2 Fibonacci retracement is right at your 100-day moving average on milling wheat. So the hope would be to get back into that range. And that's all I have for you today.